right, ladies and gentlemen, it's Aaron Fragnito, your host of the Passive Cash Flow Podcast. I'm back with another episode, and we have Emma Powell on this episode. How are we doing today, Emma?
Great. We just moved into our house, and so I'm surrounded by boxes and chaos, and this is like a little break from the break from the insanity.
Very nice, very nice. Not nice moving. I don't really enjoy moving. I don't think anyone does, but hopefully you have a nice new homestead there. And no, thanks for coming on the show, Emma. I wanted to have you on here. I know you're quite busy with a number of different businesses. I like how you focus on the lifestyle end of your business as well, and kind of early retirement, work with a lot of people helping to build their IRA. And you have a couple other services as well in the real estate industry. And by the way, to our listeners, if you're enjoying our content and you want to share with other people, I encourage you to do that. Hit the like and subscribe button. We come up with a new episode here on the Passive Cash Flow Podcast every single month. So we have over 160 episodes. We try to have exciting guests on here and new real estate and investment focused topics. But Emma, let's get into your story a little bit. And why don't you give a little bio for our listeners to tell you who you are and what you do.
Yeah, thanks for having me on the show. I love talking about this stuff. It's been a passion of mine for quite a number of years. And so when I first heard about passive income and all of that, I really dove into it. I remember this experience I had when I was a little girl, and I was asking my mom, like, what do your parents do for a living? And she said they're retired. And I'm like, what is retired? And she says, well, they don't work anymore. And I became very upset. Like, how do they make money? Like, how do they pay for things? I think I was like 9 or 10 years old. And she said, well, when you're retired, you live off of your stock market, basically your stock market earnings. And I was like, the what? Right. And she said he had a pension from the Air Force, and he also invested well in the stock market and made $1 million. And now he lives off the distributions from that. And I was just sitting there as this little girl, like, wait, what? It didn't occur to me that you had to be old to do that. It just occurred to me like, well, then I should do that. Right. And when it's somebody who's really close to you, grandpa, friend, somebody that you know in real life, or especially that you're related to because you've got the same genetic material, it just brings it back into the realm of possibility. And so for a lot of years, you lose focus on things. You're focusing on the short-term priorities, and you stop thinking about the long term. And so we just stopped believing that that kind of lifestyle was for us. And so I didn't actually start investing until in my 40s. And it was a rapid turnaround in year one to where we are now. It's just year 6. And we've already retired from corporate, living on our passive income, and had an opportunity to stop and think about some of those lifestyle decisions that you don't think about when you're too busy working for the short term to keep the lights on. And so I just started out with a couple, I wanted to go commercial right away, try to do a couple of apartment buildings, and couldn't get a loan, like didn't have any experience, even though we had sold a house in Texas when we moved across the country to Salt Lake City, and we were using the money from that house to go put a down payment on a commercial building. But it quickly became apparent that I was going to have to get a partner, and I didn't know how to pick partners. I didn't know anybody in the industry well enough. And so we decided to do a couple of smaller ones so that we could get some experience. And then we started running out of money when we bought the smaller ones, and we ate into the money we were supposed to be using for the larger one. And so at that point, I started raising capital from friends and family to go and do these deals, and really got heavily into the world of syndication and commercial syndication. And as we got closer to our own retirement, we had to change our strategy more from equity and growth investing to cash flow investing, because then you have to start living off your dividends, which is the whole point.
Yeah.
And so we've made that transition, and now we're more heavily invested in things like private debt, hard money loans, things like that.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Interesting. So, and for our listeners out there, so people hear the word private debt, hard money loans. They're kind of scary words if you don't know, hard money. It sounds like money from the mob or something like that. So how do you make money with hard money loans and private debt? How do you create passive cash flow from that?
Yeah, and I admit the first time I heard of a hard money loan, it was a realtor of ours who flipped a couple of houses, and he said he
Mhm.
had to get a hard money loan for the flip that he was doing. And I really thought that he was going to get his legs cut off if he did not pay this money back. I remember that distinctive feeling. But then one of our friends, who's a real estate investor, he wanted to flip a house, and he knew that we'd been saving up money. We actually wanted to buy a little farm, not a pig farm, but just buy a little farm. So we were saving up money for this. And he came to us and asked if we would make him a loan so he could go do a flip. And I realized, oh, this is hard money. Like this is what it is. Private
Mhm.
debt just basically means they're getting a loan from a private individual, someone non-licensed, not from a bank,
Mhm.
just friends and family type of loan. And so that's how I was introduced to the concept. We ended up turning that down because we didn't know enough. I mean, I kind of suggest everybody turn down the first couple opportunities that you come by because it sounds really sparkly, but then you could get yourself into trouble.
Yeah.
And so when I finally did make my first hard money loan with my own money, it was the first real estate deal that I ever did. And then
Mhm.
as that came back, I was using that time that money was out working because we had sold that farm and now we had some money and to figure out what to do with it. So that money was out working while I was busy attending meetings and networking, meeting people and just figuring out what to do. And so when that loan came back, that's when I was able to start buying those smaller houses and things like that. And the goal was to still be able to buy like a small building, a 12 or 15 unit that my husband and I own by ourselves, but we still have not done that. I don't know if we ever will. I mean, passive investing is so much better.
Mhm.
We've just kind of started selling the smaller stuff and using the money we make from that to go ahead and extend more hard money loans to our
Right.
network.
Okay. So you haven't had to break anyone's legs up to this
No.
point to get paid back. Okay. But that's
Yeah.
it's not out of the question. I mean, or is it not in the operating agreement, I suppose?
Yeah, the hard money basically means that the asset is qualifying for the loan, not the borrower. So if the house is worth what you say it's worth, if it's going to sell for what you think it's going to sell for, that kind of thing,
Mhm.
the collateral, if you will, is what's qualifying. And really the only thing they look at on the personal side is sometimes we'll run a credit report.
Right.
Um, but we're not looking at, we don't need their W-2, the pay stub, job history. We do like to see a resume, some sort of experience.
Yeah.
And we do that kind of due diligence to make sure that our borrowers are sound and they're going to be able to pay the loan back. We keep the properties really close to us so we can go look at them. Like we don't lend nationwide, we only do a couple of states. So most of our investors are either local to us in
Mhm.
Utah, Idaho, Arizona, because they like that we're local as well, or they're from states where they don't really want to be investing. We have a lot of investors in California who don't really want to own rentals there. It's just too expensive and they don't want to deal with it, usually high paid tech people. But our most common investor is usually just someone who's kind of approaching retirement herself, and
Mhm.
she's looking somewhere in her mid 50s and she's transitioning her portfolio over for more equity like stocks or real estate real estate equity and looking to switch over to more like bonds, loans, basically,
Mhm.
and
Yeah.
making it a little bit safer. And in hard money and debt, those words have been seared into our collective financial consciousness as very scary words.
Right.
But if debt is scary on the side of the borrower, that therefore means it's very safe on the side of the lender. So
Right.
if you're not the borrower,
Mhm.
being scared by, oh, debt is bad, then think about like, wow, wouldn't it be great to be the lender? And that's really where we ended up as we transition more out of equity partnerships and more into being the lender ourselves.
Yeah, yeah. We do something similar here at People's Capital Group. We have a debt fund. And so investors participate in that fund and they invest anywhere from 30,000 to 600,000, I think is our largest investor.
Mhm.
And they earn an interest rate anywhere from 8 to like 10.5% on their investment. They can invest for 1, 2, or 3 years. And the longer they invest or the more they invest, the higher that interest rate goes. So it allows the
Yep.
investors to them to secure their capital on ultimately through the fund on real estate title. And now, on the flip side of that, the borrower is People's Capital Group. We actually only invest in our own deals. So we're kind of our own hard money lender.
Nice.
Now, and there are rules, for the fund. We can't go above 75% ARV.
Hmm.
We borrow the money at a 12% rate, and so pay it back to the fund. So, but the investors, it's a nice position for them because they hold a promissory note and they know exactly what they're getting when they're getting it. They don't, the fund doesn't have to perform, interest rates don't, go up or go down, values go up or go down. All those variables do not affect the return that the investors participating in the fund earn. So it is a nice option for investors that are a little more weary of the market, because we
Hmm.
also are doing a 420 unit ground up development in Jersey City, New Jersey, with much higher targeted returns, but also inherently more risk, right? So,
Hmm. Yep.
and some investors have an appetite for that too. The truth is a little diversification is really the best way to do it, because with K1 equity investing, you get the K1 at the end of the year, you get tax depreciation, you can make returns in the high teens, but generally earning returns that high, you're going to inherit some additional risk. So we try to have a couple different options for our
Yep.
investors there. But I got to say, yeah, hard money lending is how we got started fix and flipping houses. I've done over 50 fix and flips, and even how I bought my first income properties. I'd buy them with a hard money loan, and then I would fix them up, rent them out, and refinance out the hard money lender into a long-term, lower
Yep.
interest rate, debt, which is pretty, the burr I see on your shirt
Oh,
there.
yep. Look at that right there.
Emma, I was burring before there was a
It
word
was
called
Burn
burr.
before Burr was cool. Wait.
Yeah, I was burring before everyone. Oh, burr! Now I go to real estate events, and I'm like, so we buy buildings, we fix them up, lease them up, and then we refinance. Like, oh, you mean you burr? I'm like, yeah,
Yeah.
bro, I burr.
I just
Yeah.
didn't trademark the term. I just didn't
Uh,
trademark the term. It's funny because the guy who was originally asked us to do a private loan to him,
mhm,
his uncle wrote no money down, and
mhm,
so he was basically through all of the 90s being raised on this kind of real estate philosophy. And those kinds of techniques have been around a really long time, right?
right. Oh,
But
yeah.
you put a fancy name on it, you write a book, and it makes it catchier, and people are going to catch on. And Bigger Pockets has done a ton. I mean, that's really where I got started,
Mhm,
because I went to a real estate meeting that was trying to sell me like run to the back of the room and give me your credit card. And I was like, I don't really buy or invest or anything on the first time. Like a one call close just gives me the willies. And so I just felt very uncomfortable. And I went home and I just was researching this organization because I need to make a more considered purchasing decision. And so I came across these threads on Bigger Pockets talking about this organization. And one of the things they said was, well, why would you pay all that money for that mentorship program before you've exhausted more free and low cost resources? I'm like, so what are the free and low cost resources? Well, Bigger Pockets was the free one, and low cost was my local real estate investor association. And
mhm,
I didn't realize it at the time because we had just moved to Salt Lake City, but the RIAs in Salt Lake City are really exceptional. And I really became the beneficiary of being within a great group of people and learning. And I thought the RIAs everywhere were like that. And since we've been traveling full time, I've discovered that's not always the case. But I think I got really
mhm,
lucky to stumble across real estate investing in Salt Lake, because I mean, we lived in Austin for 20 years. And like I said, I knew this investor, that investor, but for whatever reason, we never thought we should get into it ourselves. And
mhm,
now old friends from Austin are sending me
mhm,
messages like, oh, I own a hotel and 18 rentals and an apartment building and we're developing it. And I'm like, how did I not know this about you before? They said, well, you're just like the soccer mom down the street, right? It just never
mhm,
came up. And
mhm,
so now I'm seeing like I had those opportunities around me in Austin and I just didn't take advantage of them because I didn't know. But in Salt
mhm,
Lake, I was doing all the free clubs and the low cost resources to dive into this world.
mhm.
And I made a ton of progress in a very short period of time. And then I was a better consumer of some of the higher priced programs that I later ended up going into.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth, so find out if you qualify at peoplescapitalgroup.com.
Yeah, I never plunked down the big cash for a coach or the programs. I did know some people that did, and then they like never opened the
And they
package and
never
like
did
sent
anything with
the
it.
books and CDs that they paid 20 grand for, and
Yep.
like, here you go, just take these.
Yep. Yep.
So, and then sometimes you could also buy them on like eBay or something for like $500, what's normally the
Yeah.
package. So it depends. I guess you're not supposed to resell them though. But anyway,
Well, the information should be free, and I think
yeah,
now it is. A good
yeah.
coaching program is somebody who can contextualize information. I don't do coaching. I probably never will. It seems like
Mhm,
that sounds like a job to me, which is not
mhm,
passive, and it's not the point of what this podcast is about. It's not the point
yeah,
of what I'm about. I mean, when you
right.
retire, it should be all be about passive income. So I don't really want to get into that, but when I see somebody else, especially I've really valued some sales coaching. So it may not even be like a real estate. I haven't done any real estate specific stuff. It's more like real estate sales coaches and things like that. Because
Mhm,
nobody wants to be having conversations with potential investors. You feel like you're selling something, and that mindset shift of this is what we're investing in, things that have changed our lives, and we want to put that out there for other people. Because looking back at the people who had the biggest impact on me in my journey, granted, my real estate associations and all of that was huge, but the people who spent a lot of time educating with me were capital raisers. So they had this ulterior motive that they
mhm.
wanted me to invest capital into their deal. But by so doing, they spent a lot of time educating me, pointing me at good resources, introducing me to people, and really befriending me. And I'm still friends with a lot of them. Some of them I've invested with. Some of them have ended up investing with me as they've
Ah,
moved more passive. And
right.
so those relationships with those salespeople or capital raisers changed my life. And I was very uncomfortable. I didn't really want to do it. But when I finally thought back and I realized, like, how would I be? How would I feel? Where would I be if they hadn't put themselves out there and overshared on social media and gotten over their anxiety by picking up the phone and following up with me? My life would be very different. And I thought I
Mhm,
needed to get over myself and be able to offer that out there and pay it forward. And so sales coaching, I have had several different sales coaches over the years, has really helped me to develop the not only the self-confidence to do it, but the purpose-driven reason behind why I'm doing what I'm doing,
mhm.
remembering how it's impacted my own life.
No, that's a great point, Emma. And there's so much value out there at these local RIAs. A lot of times they're free or they're $20 to join, something like that. I started a local RIA called New Jersey Real Estate Group. I should probably know the name of it.
Yeah.
New Jersey Real Estate Association. And so it's been a godsend. We have about 5,000 members in it. I think I started like 2012, so it's been a
Mm,
while now. Yeah, it's like 12 years we've been running it. So I used to do events every single month. That was a lot. I kind of felt like an event manager for the most part. You got
yeah.
your sponsors, your marketing for the events, and so on. You look the venue, all that stuff you have to set up. So it's definitely a lot of work to run a RIA. Now we do them every 6 months. We do like a summertime event. We do like a January kick off the new year event. And then we'll do like 2 building walkthroughs through the
Hmm.
year for investors. So we do like quarterly events now more so.
Yeah.
It kind of a little more like quality over quantity. But I got to say, it's helped us to get to where we are today. We have about 100 passive investors in our group. And I think if I looked back and how I contacted most of them, it was either through my RIA or going to other RIAs, because I also try to speak at other RIAs about
Hmm.
once a month. So, because public speaking is like any other talent or skill set. You got to sharpen it. You have to be consistently doing it to stay good at public speaking. And so not only do I like to get out and do some public speaking about once a month, but it also gives me a chance to go reach new groups of people, new RIAs, generally in the tri-state area. And then I also go to like family office and RIA events and speak there, but that's a little different. You're usually plunking down some serious dough and flying
Yeah.
out somewhere, so those kind of more of a high level speaking events, which of course allow us to connect with family offices and RIAs, which has allowed us to kind of get to the next level on fundraising. Um, but yeah, RIAs are what it's all about. So before, what else is good too? A lot of those coaching programs, I won't mention any names because there's plenty of them out there. Here's the sales process. I talk about good salesmen, by the way. If you want
Oh,
a good salesman,
good
go to
sales
those
is
things.
like being a therapist. Bad sales is telling people they need to buy something today because we only have one slot left. And so when you
Right,
get with a
right.
sales coach who is teaching you how to be authentic,
Yeah,
that's a good sales coach.
yeah.
And a bad sales coach is going to teach you, sell or be sold type of outdated
Yeah,
techniques.
yeah.
So
Pressure
yeah,
sale,
yeah,
right?
yeah.
Yeah, the scarcity, the pressure sale, and that's the duty at these things. But here's what they offer, right? So they give you the first thing, they get you to come to like a weekend event, right? And that's normally
Yes.
like $200 to like 349, something like
Hmm.
that. Now, at that weekend event, you get like everything because they want to pack in as much as they can. Like, I don't know, some of them I feel are this way. You get a lot of value for it. A lot of times like $199 for like a 2.5 day event, like they'll
Yeah.
pack the whole thing and they give you like most of what's in the books and CDs they're trying to sell you in the coaching, because they want you to buy, the next level package. And at the end of that event, they'll say, okay, for the low cost of $29,000, you can get our base level coaching program. Now, don't buy the $30,000 coaching package, but if you pay the $200 to get the weekend jam packed with information,
Yeah.
you're also in a room full of people that are interested in learning about real estate investing, or maybe already own some properties, are somewhat in the game. So you want to recognize that. It's a great networking opportunity. And it also, they're going to give you a lot of their content in that $200 weekend. So if you want to play the salesman, go to the $200 weekend, soak it all in, then say no to the $30,000 package and
I have
walk
done
out
that,
that
yes.
door without giving them your credit card information. So, and that's
Yeah.
the right way to do it, in my opinion.
Yep. And I have gotten a lot out of a lot of those like $94
Yeah.
weekends. And when I got to the point where I was no longer getting anything out of the $94 weekend,
Right.
that's when I realized like this information should be free. And what any kind of a good program would be selling essentially is contextualized advice and a network of experienced people that can help you when you have specific problems. I have not found any like capital raising ones to really give me access to people who actually invest in deals. However, I recently heard a statistic that 25% of other syndicators invest as passive limited partners in other deals. And I thought, well, if I was at any event of entrepreneurs or anything else, that was 25% of them were experienced syndication investors. I'd be like, well, I want to be there, right? And so over the past year, I've really rediscovered my love of real estate networking, because even though a lot of them are doing their own deals or raising capital for their own deals, a lot of us are actually putting our money into other people's deals, and it's a rich source of potential investors. And I think that I was like, oh, I want to be the only real estate person in the room and this type of stuff. But I realized a lot of my investors are from those relationships that I made with other real estate investors. And I don't have to explain real estate to them. They totally get it. And they may
Right.
be successful flippers or wholesalers or whatnot, and they're already running a business and they are busy and they'd love to get into lending money. They'd love to get into the commercial real estate equity that we do. And they just don't have time because they're really focusing on niching down into a business like wholesaling or something. And they become really great investors because they get real estate and they understand the value that we're giving them by not having to make them do it themselves. And sometimes you don't get that same understanding outside of real estate circles. So I've really doubled back down on networking at real estate events and networking in groups that have a lot of other real estate investors. Because for a long time I was like, oh, I'm not doing that, and I think it actually hurt my growth.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth, so find out if you qualify at peoplescapitalgroup.com.
Yeah, absolutely. For a while, I did go to a lot of like other syndication fundraising events to kind of learn the business. How are these things structured? How do you raise capital? How do you build relationships? And a lot of people that invest with us are other syndicators, or like the fund of funds things is pretty popular, right? So then they go out and raise capital. They bring that capital into your deal. I have a gentleman who's a doctor. He brought in like 5 other doctors to our deal. So so that's kind of becoming a great way to source capital. I know a lot of groups that really hardly raise any capital direct. Maybe they raise like 20% of their capital direct. A lot of it is fund of funds or other co-GPs, right? That are basically people like me and you are out there raising capital and say, okay, I'm having trouble finding a deal, but I have access to all these investors, and oh, you have a deal. Well, I'm not going to bring in my investors for free. It took me years to build these relationships and lots of marketing dollars, but you give me a piece of the general partnership for myself or my company. Well, now, it might be worth my time to go out and pitch your deal to my investors, especially if I like you and I like the deal, and I think it's worth the investing in. So co-GPing is a very popular way to build up your fundraising capabilities at those types of events. And I got to say, some of the hardest capital too is like going to like doctor events or things like that,
Yeah.
where you are literally taking a cold relationship with someone who has
Yes.
been in a completely different industry
Pitched,
their whole
pitched
life.
endlessly already.
Right, pitched endlessly. Every person, every sponsor there is selling them something. You got the stock guys, the bond guys, the crypto guys, and the
Yep.
real estate guys, and so we're just another kind of option for them.
Noise.
Yeah. So and generally those types of investors are very kind of bearish and skeptical, and rightfully so, right? Because they're like the seventh guy that pitched them a deal and to invest in the 15 feet they've walked through the
Yep.
showroom floor. So those are some of the hardest relationships to build. You kind of automatically come off like a salesperson because you're there. You paid the $6,000 to get in front of them, and now
Yep.
you need to make do with the 48 hours you have. So that's a challenging relationship to build on. But I have had some success there, but I'd say most of the time it's about just having a good brand out there, being a thought leader, being an educator. There's no such thing as a hard close when you're raising capital from
Yep.
someone. You got to be, maybe if you're Grant Cardone there is, but I think for the most part, maybe I'm just jealous. That guy raises a lot of dough, but I've heard they're kind of hard closers, and that's just not my style. Like, this is your IRA, this is your savings,
Yep.
this is your hard-earned capital. This is the money you use to put your kids through college, or my investors. One of them just told me I put my kids into private school. I didn't like what the
Yeah.
public school was teaching them, and now because I've invested with your company, we've done well. He's been invested with us for like 9 years now. He's able to put his kids in private school, so that's just an amazing story to hear. It's like, that's why we do it, so you can improve your lifestyle, like with you traveling the world. So what do you do, Emma? You're traveling. What's your story there on your passive income and your lifestyle as well? Talk to me a little bit about that.
Yeah. Well, before I do that, I just want to add, one of the things that is so nice when you're doing like a fund of funds or a co-GP is that with a larger pool of money, you're able to then go in and negotiate for better terms for your investors. And that's one thing I really, really like about being able to do that, is because we can oftentimes negotiate them a better deal than even if they invested directly and got around, because there are going to be more management fees and layered fees and things like that. And so even with adding those fees in, we can often get a better deal for our investors out of it. And that, to me, is a huge part of what we do, is not only finding great deals. When you have a pool of capital, people just bring you deals, right? And you can be very, very picky. So I love being able to be very picky. And I also love being able to say, like, hey, if we bring in this much, what can you do for us? And making a
Mhm.
better deal for our investors as well. So that's an exciting part of the whole co-GP and fund of funds movement, is that ability to negotiate for better shares, basically.
Yeah,
And
yeah,
so
100%. Yeah. Mhm.
yeah, and we have an investing club that we do where people who don't want to be limited partners can be joint venture partners. We put together several deals over the years where one of the club members will be like, "Hey, I want to go co-GP into this deal, but I don't know how to raise money," so they'll just get some other club members and they'll go, and actually one of their negotiating tactics is to say, "I want access to the meetings, to the information. I want to help out where needed," and so they're coming in and co-GPing with a joint venture instead of with limited partners. And so it's a very different structure there. You just have to be creative within the bounds of the law. So I think co-GP can be very dangerous from a compliance standpoint.
Yeah.
And so you just have to make sure that you're doing it correctly,
Mhm.
that your lawyer has signed off and provided you the correct documents. Because boy,
Sure.
you do not want to raise money wrong. Let's just put it that way.
Yeah,
So
absolutely, right. Mhm.
but it also allows us to be remote. And that's probably one of the reasons that we got out of actively managing or being managing partners. I started giving away managing partnership to my other partners so I could walk away and work more remote, because I lived abroad when I was in college before I met my husband. And it was such a wonderful experience. I wanted to give my kids that experience. And I didn't want to do it in retirement after they had moved out. I wanted to be able to go and do some of these things while they were still living at home. Little did I know my kids would end up hating it, right? My dream oftentimes is not their dream. But we
Yeah.
spent the last year and a half traveling. We thought, okay, let's do the United States first, because like, I don't want to move abroad. Like, I'm not doing that. Well,
Hmm.
there's a lot of stuff in the US that we haven't seen. And so we spent 3 months backpacking the Arizona Trail from Mexico to Utah. It was 800 miles. And boy, my kids now know that they can dig deep and do hard things because we basically made them do this thing. We're going to all need therapy for PTSD after that, right? But it was an amazing accomplishment. My daughter at age 11, she's the youngest person who have ever through hiked that entire trail. And we didn't even
Wow.
know it until halfway through the trail that she was doing that, and started to
Hmm.
get us a lot of attention when people found out. Like trail angels came in to help us and people came in to interview us because of the amazing thing that she was doing. And I felt like that they had some really cool people reach out to them and give them well wishes and good messages. And we couldn't replace that with anything else that we've ever done. And still to have those friends in their lives today when they need to turn to someone for mentorship or advice, it was really very cool. Like high level business people, politicians, local people. It was an amazing experience. And then
Hmm.
for a couple of months, we just kept traveling around, staying in hotels, staying with family, doing our thing. And then we bought an RV and did the entire, like, the western southern part of the United States. And then
Mm.
they asked to slow down, so we spent 3 months in Orlando. We spent 6 months outside of Dallas. We bought an RV park and managed that. And then they said, can we please move back into a house? And so they decided, even though we're from Texas, they're like, I don't really like Texas. They wanted to move back to Salt Lake. They love
Uh-huh.
the weather here and they love the outdoor lifestyle and
Yeah.
all that. And they said, we just really like it there. And so we moved back to Salt Lake. We'll be here for about a year, maybe 2 years. And then we're heading to Spain for, I think, a year. There are a couple of solar eclipses there that we want to catch. And so the freedom to be able to do that has obviously, from what I just described, like completely life-changing experiences that
Hmm.
we've had and formative experiences for those kids.
Hmm.
And we had 3 adult kids who didn't come with us. They were actually living in our house and renting out extra bedrooms. And when we said we were coming back and you guys need to move out, right? They're
Hmm.
like, we can't move out. Like, we don't, the jobs are tough, the economy is tough.
Hmm.
Um, they're either not through college or opted out of college and their businesses are not doing well. It's just been really, really, that's one of the biggest struggles that we've been having is
Hmm.
us living and enjoying ourselves on passive income, but we don't have enough to be able to support everybody basically struggling to make enough money. So we had to sit
Right.
down and be like, okay, another one of our dreams is to start a family business. Are you guys game for this? And they
Hmm.
said, yes, absolutely. So now we're working on starting a real estate marketing business, doing pitch deck design. So I'm a graphic designer. My background has been, information investing design, and my daughters are graphic designers. And so I said, hey, you guys want to go and do this marketing company
Hmm.
with me? And that, so far we just started that. It's not really doing anything yet.
Hmm.
But the opportunity to just collaborate on our marketing, the video editing, and the graphic design, all that has been fantastic. And I'm looking forward to growing that business and just giving them the opportunity to jump into this industry.
Hmm.
It doesn't the traveling full time, like, that's really sexy type of stuff and great
Hmm.
content. But I'm finding a lot deeper fulfillment with the family business that we're starting.
Right, right. 100%. Well, it all comes back to your family and your children and creating a lifestyle for them where they understand the value of hard work, but also don't have to struggle to eat. You can help them out of hard times, and so yeah, that's what it's all about, and that's why I love the idea of owning a large real estate portfolio that is
Mhm.
professionally managed and building a business that I one day maybe hand down to my son or sell. It depends if he wants to. He's 2.5 right now, so
Yep.
I'm not sure yet if he'll be taking over the family business, but I am
Yeah.
teaching him.
My kids will
Uh,
not be. They won't be taking over the real estate side of things. But
yeah,
that's kind of why we decided to do something that was more in their skill set. But they either own real estate right now in partnership with us, or it's one of their
right.
big goals to be able
Yeah,
to do. But I mean, our properties, especially commercial real estate, those loans only last 3, 5, 7 years, right? Like,
Mhm.
you usually have to move that stuff on.
Mhm.
And so I don't think they'll be inheriting the real estate business, but we are working on setting up a family bank and some other things like that that
Mm.
will allow them to enjoy the fruits of the labors and
Mhm.
be able to get businesses that will sustain them. Because I feel like that knowledge and that
Mhm.
experience and that belief, like that mindset I
Yeah,
had when my grandpa told me, or my mom told me what my grandpa did for a living, right?
right.
And then I forgot about it for all those decades and then
Mhm.
came back home to that idea. Like, I want to give them that knowledge and that empowerment and that
Mhm.
mindset to be like, well, mom and dad did this in their 40s. I can certainly do it in my 20s or 30s. And so
Sure.
that's really what we're looking to pass down.
Yeah, absolutely. Yeah, that was kind of like with me. I read the book Rich Dad Poor Dad senior
Uh-huh.
year of college and had that aha moment. I was like, oh,
Yep.
this is what I want to do with my life. I just don't know anything about it and have no money, but I'll figure it out. So
Yep. That book is notorious for leaving you with a desire to do something, but still don't
yeah.
know anything about it.
Yeah, of course, of course. But that's all right. It accomplished its goal in getting my butt
Yep.
going, and
Yep.
and honestly, still to this day, I prefer to refinance and pay myself with the bank's money
Mhm.
instead of selling my assets. Now, we do usually look at our bottom 10% performers, and we'll harvest
Yes.
those and sell those. There's always a little bit of pork you gotta get off the balance sheet there,
Exactly.
but for the most part, I prefer to refinance my assets, hold on to my real estate long term. We buy in areas that the equity does grow over time. We manage them in-house, our in-house property management company. So, and now we're getting into nice Class A real estate development with very experienced developers and builders. Very exciting kind of new chapter here at PCG. But anyway, again, to my friends, if you're enjoying what you're hearing here at this episode, please share with your friends and please hit the like button. Emma, how can people reach out to you and learn more about your journey?
Yeah, I've also got a podcast that Aaron is going to be on very shortly,
All
and it's
right.
called The Passive Income Adventures. You can check it out wherever you like your podcast. We have a YouTube channel where we do short versions of it as well. And so if you like podcasting and you want to talk more about passive income and also like the adventures part, the lifestyle stuff that we do, we play. I have some instructional videos on our YouTube channel. So if you want to check out that podcast, just go to YouTube or Spotify or whatever and type in Passive Income Adventures. It should come right up. And if you want to jump on my calendar with me and just have a direct phone call with me, it's investwithemma.com. And that's just an introductory call if you want to be an investor, like a limited partner, would love to hear from you. Or if you just need some direction and some introductions, or you want more information about our club or something like that. One thing that I love doing is taking those phone calls and just help getting people kind of into the right funnel, whether they want to be active investors, passive investors, and just kind of helping them figure out what direction they want to go. So if you want to jump in and just have a contextualized advice, free phone call,
Yeah.
investwithemma.com.
Nice. All right, excellent. Of course, people, you want to connect with People's Capital Group, peoplescapitalgroup.com. I think this is episode 163 or something like that of the Passive Cash Flow podcast. So thank you to all our listeners, and thank you to all the people that have helped us get to where we are today. The 5,000 people, our RIA group, and all of our guests that have come on the podcast as well. But connect with Emma there, and or connect with People's Capital Group. We all are doing different things in real estate. There's so much to learn, so many ways to build your wealth and create that lifestyle that you're seeking. So thanks again for listening to the Passive Cash Flow podcast. Enjoy your day.